Coming up on the SBS on the Money Markets podcast, the Australian share market eases, precious metals down, and we take a look at the investment themes for 2026. All of that and more next. Hi everyone, welcome to the SBS on the Money Markets podcast for this Tuesday, the 30th of December 2025, the penultimate day of the year for trading on the Australian share market, which closed a touch lower today. The S&P ASX 200 off by 0.1% to 8,717. Sectors ended mixed. 6 of the 11 sectors on the index finished lower. The worst performing materials, that's on the back of falling precious metal prices. Property stocks also falling today, a number of them going ex-dividend, along with information technology and healthcare, those sectors falling today. The best performing energy as the price of oil rose around 2%. Consumer discretionary, consumer staples and financial stocks also closing generally higher. Of the top and worst performing stocks today, the top performing stock, that internet broadband provider Superloop, up by about 2.3%. Online furniture store Temple & Webster up by about 1.2%, and Net Wealth Group gaining around 1.8%. The worst performers include gold producers like Evolution Minerals, down by about 3.7%. Newmont off by 4.1%. Tech firm Silex Systems off by 4.4%. But the biggest loser today was that lithium company Liontown, off by about 4.7%. So for more on the day's market action, I spoke with Gemma Dale, market analyst at nabtrade. Gemma, we are coming toward the end of the year. So what's driving the market at the moment?
Look, it's soft. It's always quiet at this time of year. Volumes are way down, but they should be. It's a fairly typical time of year when we don't see huge amounts of activity. But it's worth noting that there are sectors that are driving some of the performance of the market. Materials were pretty soft today. They were quite weak, not because of the iron ore price. It was actually precious metals today that were driving everything a bit lower. REITs, also a lot of them ex-dividend. So there was a lot of ex-dividend stuff that was driving the market down a bit. And then we had a little bit of strength in the banks, pulling it up the other way.
Okay. What I find interesting today anyways, all the moves in the commodity space, especially precious metals, silver and gold especially saw some sharp losses compared to where it was this time yesterday, but it did follow some pretty incredible gains. I mean, I think silver's up around about 8-9% since Christmas, right? This pullback though, surely expected?
It's got to be expected. Silver is the more volatile of the metals. When you look at gold, it's been extraordinary, right? You've seen this incredible run. It's up more than 50% over the last 12 months, and it had a reasonable run into 2025 as well. So you've seen this incredible performance in gold. Silver tends to lag. There's been this big talk about when silver was going to catch up. It's up more than 150% over this year, which is just extraordinary. But to your point, absolutely rocketing in the last sort of 3 to 4 weeks as well, up nearly 30% over the month. So of course you would anticipate a little bit of a pullback from that. It feels quite volatile. It feels like there's a real movement in the market at the moment, but it's only to be anticipated when you see things running at that kind of level, particularly something like gold that's supposed to be the defensive part of your portfolio, right?
Any company news catching your attention today?
Look, one that's interesting just because it has been capturing our investors' attention all year. Drone Shield has another contract announcement. They are very cautious when they put their announcements out. So it's just a Western military contract. It's $8 million or thereabouts. Not huge. It didn't really move the share price, but they've had 3 or 4 of those in the last month. They are just, I think, adding to the story. It's been a super volatile stock this year. It's 50% off its highs, but it's also very strongly up for the year, 300% or more. Investors have been really looking at it. They like the story. Defense is somewhere they'd like to be. So it's been getting a lot of attention, and more contracts just add to that for them.
Since we are at the end of the year, I'd love for you to take a look back. Are there any client trends, those that use nabtrade, that you've seen on the platform over the past year?
There's been a real range of stuff. It's actually been super interesting. So probably the most obvious tangible thing that we have seen is we've seen a real increase in cash over the last 12 months. And that tells us generally that investors are a bit concerned about where the market is. They feel it's quite toppy. We saw this coming into 2020, believe it or not. So through 2019, that year, the ASX added 19% in the calendar year. It was very much unexpected. Investors felt quite uncomfortable with that. They felt like the market was sort of expensive. Then when it fell during COVID, they just threw all of that cash straight back into the market, buying like nobody's business. We saw a similar trend at the beginning of this year on Liberation Day. So when the market fell really sharply in April, huge buying. That was our biggest trading day on record. But as the market's rallied so strongly since then, particularly the US market, we've just seen a lot of people go to the sidelines. So they're taking their dividends in cash. They're just a little bit reluctant to chase prices higher. But then when you look at what they are interested in, we've seen a real shift into materials. So a lot of trimming the banks and moving into materials. It's been an unbelievable trade this year. They were on gold really early. So sort of early this year and very late last year, they were buying gold, which has played out really nicely. And then the other really interesting sort of more niche one, European defence stocks have been super popular for something that we never saw, very popular, sort of particularly the early part of this year.
Okay, so that's 2025. If I get you to take your crystal ball out and take a look into 2026, what do you see as the key investment themes or trends?
Look, the big questions I think that our guys are feeling they need answered before they start really plowing money back into the market. There is this question about rates, which no one was anticipating months ago. But this idea that we were going to see a continuation of a cutting cycle has shifted very dramatically to the point where NAB's now calling for increases or expecting them in the first half of this year. So that's going to be quite interesting for investors. That changes your dynamic pretty dramatically. So there is this question about whether rates will increase and if they will increase to the extent that we expect, whether also the AI theme can keep running, because they're the two big things that investors have been counting on, I guess, through 2025, that AI will keep running and that we will see cuts in rates. We're now seeing a change in expectations. But when you look at forecasts from all of the major global investment banks, all of them have positive forecasts and all of them have expectations that the AI theme keeps running. And there is this expectation that Trump will run it hot through 2026. If he runs it hot, then I think investors can feel reasonably comfortable that it won't be a terrible year for equities.
It's Gemma Dale there, market analyst at nabtrade, and she wraps up the podcast for this Tuesday. Don't forget, if you enjoy it, give it a rating or review on Apple Podcasts and Spotify. Click subscribe. Remember, the market closes tomorrow earlier, about 2 hours earlier, 2:10 p.m. Australian Eastern Daylight Time, as it's the final trading day of the year. I'll have more details tomorrow. See you then.
This SBS on the Money Markets podcast is provided for informational purposes only and should not be understood as constituting advice or a recommendation. It is not personal advice and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.